Hello, today I'm delighted to be joined by Mark Chandler, Global Head of Currency Strategy at Brown Brother Harriman. Hi Mark, so after a tumultuous week for the US economy, all eyes will be focused on various data releases this week. We start with the building permits and industrial production. What else will you be keeping an eye out for?
We know that the U.S. housing market is weak. We know the U.S. economy expanded at 0.8% annualized pace in the first half of this year. So we know the economy is weak, but the key reason that the Federal Reserve has not engaged in bolder actions, such as QE3, may have more to do with inflation. And so I think the market's going to focus more on inflation numbers. And in that regard, the CPI numbers probably more important than the PPI numbers. And what we're going to likely see on the CPI numbers is that the decline in headline inflation in June was reversed in July. And the core rate of inflation is still creeping up. That is, CPI, excluding food and energy, probably makes a new high for the cycle, which would put us at new two-year highs, something closer to 1.7%.
Let's talk about the US dollar and its status as the world's reserve currency. Now, what I want to know is, does the US dollar still warrant this status?
Today is actually the 40th anniversary of the end of Bretton Woods. And as you know, the Bretton Woods was the agreement after World War II of pegging all the other currencies to the dollar and the dollar to gold. That ended 40 years ago, and it ushered in this era that we're living in now of floating exchange rates. I think in many ways there's been, over the years, various so-called rivals or pretenders to the dollar, including when the euro was first born in 1999. Many people thought the euro could replace the dollar or supplant it. And we know now that the 11 years after the experiment began, that the euro is primarily the sum of its parts. That is, the écu, the Deutschmark, and the French franc made up about 25% of the world's reserves in the early 90s, and the euro today makes up a little bit more than that as far as overall reserves. I think that the dollar, despite what the Chinese may, their declaratory policy, I don't think that China is ready to supplant the dollar or replace the dollar with renminbi, which is not convertible outside the country yet. I think the dollar's role not as just a reserve asset, but you think about foodstuffs, grain, besides the grains, the metals, fibers, various oil, various other commodities are all still traded and invoiced in U.S. dollars. However, in the short run or intermediate run, the dollar will still be under some pressure, partly because the Federal Reserve is still indicating that rates will be low in the U.S. for 2 years at least. Another 2 years. And so I think that this is one of the supports the dollar has gotten in the past is interest rates relative to Europe, relative to Japan. But those interest rate differentials have all but disappeared. So I think that in the near term, the dollar is probably going to come under more pressure. For the most part, the euro has been trading in a 140 roughly to 146 trading range, and I think we can go up and test the upper side of that. I think that dollar yen is trading now around 76.5. We could go down a bit further despite threats of BOJ intervention. I think that the dollar can also weaken against the British pound, even though it seems likely that later this week we'll learn that some of the hawks at the Bank of England have capitulated. But sterling could move back up to the upper end of its recent range, probably comes in closer to 166.
Thank you for that, Mark. Mark will be back for more interviews here on Dukascopy TV. If you want more exclusive interviews from some of the world's most prestigious banks and economists, then stay tuned.